Happy Friday. It is Springfield's Morning News. I'm Greg Bishop on 92.7 WMAY. Springfield's News and Talk. A lot to get to on this Friday, including Hero of the Week. In about 2 hours, we'll open that up for you, but we've got plenty of other things to tackle this hour. We'll talk about the labor amendment. We'll talk about the Safety Act, but let's review some of the latest numbers concerning the economy. And, of course, you can always chime in here live and local at 217-629-7970. Again, 217-629-7970. How are you feeling about this economy, especially as we rapidly approach the November 8th election? It's, in 11 days or so? So it's going to be up to voters whether they like the direction of the country and the state or if they want to see some change. But let's go over the latest economic indicators. Of course, a lot of talk about the gross domestic product, which came out yesterday, and that's the national GDP. And we saw two consecutive quarters for the first half of 2022 of decline. And that had a lot of people thinking that there was going to be a recession. But then the GDP numbers came out for the third quarter yesterday, and it showed that the U.S. economy grew 2.6% at an annual rate for that third quarter. And again, that's after two consecutive quarters of shrinking U.S. economy. Now, They're of course, that's a bright spot, but when you look at some other indicators, it's obviously not just the GDP. You look at high inflation numbers, you look at interest rates going up and what that's doing to consumer spending, in particular in the housing market. Housing investments plunged at a 26% annual pace. And reporting is that that's because of surging mortgage rates and the Federal Reserve raising borrowing costs with the anticipation that they're going to raise borrowing costs again. And that's caused some to look forward and say we're not out of the woods quite yet. And, of course, you've got high inflation that's impacting consumers as well, near 40-year highs with the spikes in household spending all across the country. Maybe that is one reason why we're seeing the GDP increase is because of, practically everything's costing more. So, of course, there's going to be higher output as far as it is concerning money. But you also have economists with Morningstar talking about the economy's contraction in the first half of the year from a variety of factors, and that may not reflect the overall health. Very likely did not constitute a genuine economic slowdown, some say. But you look at things like drop in business inventories and various other types of events that are cyclical. So that's at least the GDP and some of the other economic indicators that there are. But I think it's also important when we talk about the unemployment situation, which is obviously, we want people out there working. We want members of society to be productive. And when we see the unemployment situation that we had during the pandemic, that was incredible just to see the huge spikes in unemployment. I mean, here in Illinois, there were several weeks in a row where we had more than 200,000 people apply for unemployment benefits in 1 week alone. And then you had all of the situations with the unemployment offices not being open and all the fraud and so on. But unemployment claims across the country did inch higher, but the reporting is that it still remains low. But I think that it's important when we talk about the unemployment rate, we also talk about the labor force participation rate, the workforce participation rate. And these are some charts that the Federal Reserve central banks have been posting for a while. And it looks at, the labor force participation rate, the civilian labor force participation rate. And if you look at the chart historically, it's pretty incredible. At least this chart that the Bureau of Labor Statistics has for the labor force participation rate. And you could see it goes back a good 20 years. And even back in September of 2020, of 2002, you had a workforce participation rate of 66.6%. And it is cyclical. You can see it kind of ebbing and flowing as it progresses throughout the years, declining throughout the early part of the 2000s, but then being a little bit more steady in the latter part of the 2000s before you get to that economic crisis of 2007, 2008, stretching into 2009, where the labor force participation rate shrinks. Now, what is the labor force participation rate? It's the number of able-bodied people who are actually in the workforce, right? So if you got 100% of able-bodied people and a labor force participation rate of, say, 65.7 as it was in January of 2009, that means 65.7% of able-bodied people were working. So that's an interesting number compared to the unemployment rate. We hear the unemployment rate all the time. I think nationally it's like 3.5. In Missouri, it's like 2.4. Illinois is 4.5% unemployment rate. And you hear that and you're like, oh, that's a low percentage. But when you look at the labor force participation rate, that really does tell a totally different story. And again, looking at this chart that the Bureau of Labor Statistics has, you can see the trends. It's plummeting. All right. So again, in 2002, you had 66.6% of a labor force participation rate. And you fast forward just before the pandemic hit, and you can really see the tanking of the labor force participation rate. Just before the pandemic, in December of 2019, it was 63.3%. So 63.3% of those who are able to work were actually working. And again, this is different from the unemployment rate because the unemployment rate only calculates those who are getting unemployment or who have applied for unemployment. That's only what that number does. The unemployment rate is only about those who are seeking unemployment benefits. Again, the labor force participation rate, I think, is a much more clear number. But you can see just before the pandemic, 63.3% labor force participation rate. It plummets after all of the government-imposed economic shutdowns down to 60.2%. And we have still not fully rebounded to pre-pandemic levels. Nationally, we're at about 62.3%. But you can also look at Illinois' labor force participation rates. The St. Louis Fed has this broken down just by state. And you can see that Illinois' labor force participation rate most recently is 64.2%. And that's after, of course, it plummeted down to around 62.1% during the pandemic. Compare Illinois' labor force participation rates with neighboring states, and you can kind of see where we're at. And the labor force participation rate for Illinois, 64.2%. Labor force participation rate is lower for Indiana. It's higher in Iowa. It's way low in Kentucky. I wonder what's going on down there. 57.8%. With Missouri's labor force participation rate, 65.5%, and Wisconsin at 65.1%. So those are just some of the states around. I think I forgot to add Michigan in there. What's Michigan looking at? We can go to the overall chart and take a look. And Michigan's number is right at 59.3%. So Illinois actually is faring better than most of the neighboring states. But still, I think that's an important assessment to look at, the labor force participation rate. Hopefully that gives you a little bit better of context of where we're at. So the labor force participation rate still not where it should have been before the pandemic. And just again, looking at Illinois in particular with that metric, let's see what Illinois has. Before the pandemic, we were right at about 64.5, and we're down to 64.2, so we're not quite to pre-pandemic levels with the number of people getting back into the workforce. And the economy is something that everybody is obviously thinking about whenever they head to the polls. So we'll see just how much this plays into whatever the outcomes are for the November 8th general election. It is Springfield's Morning News. I'm Greg Bishop on 92.7 WMAY, Springfield's News and Talk, and we got much more coming up here, so stay tuned.